In 1 minute. Yes, can I able to see the screen, guys?
Now it is
Yes, sir.
visible.
Okay, fine. Sure, guys. Thank you so much. So, yesterday we discussed about the day-to-day activities, guys. So today let's discuss about very important activity which we will perform on monthly basis. That is reconciliations. Okay. So it reconciliations. It is also be called as recons. It's also be called as once. It's also be called as tricks. So these are the three. Most of the people in the shortcut they used to call as Rex. Rex is nothing but reconciliations, guys. Recons is nothing but reconciliations. Okay, so these are the three different names which they used to call it out: Rex, reconciliations, and reconciliations. Okay, so normally in general terminology, reconciliation is nothing but revalidating. Reconciliation is nothing but revalidating or rechecking. Okay, so reconciliation is nothing but revalidating or rechecking. Okay, reconciliation is nothing but revalidating or rechecking. Guys. Okay, so reconciliation is nothing but it is a process of revalidating, revalidating. So why it is to be done? Why the reconciliation is very important? So let's understand the meaning. Reconciliation, reconciliation is a process of comparing two set of records to check the accuracy of the financial data. Okay, so why this activity is very important? Okay, so what is this two set of records? So for every transaction, there will be a two set of data. For every transaction, there is a two set of data. See, example, assume for every transaction, there is a two set of data. So, example, payment made to payment made to XYZ vendor, payment made to XYZ vendor from bank, 10,000 rupees. So, what is the journal entry for this guys? If you make a payment to vendor, what is the journal
Bank
entry?
account data to XYZ vendor.
Is it bank account to the XYZ or XYZ to bank account?
XYZ to
XYZ
bank.
account debit to
XYZ
bank
account.
account.
XYZ account debit to bank account. So, here, this is the data recorded in where it has been recorded, guys? Books of accounts. Clear? The data recorded in books of accounts. This is one set of data. This is one set of. What is this one set of data, guys? The data which is recorded in books of accounts. And what is the backup for this? What is the where can we evaluate whether this payment is made or not, guys? How can we check? Yes, what might be the proof for this particular payment? What is the proof, guys?
Cash.
In the
Bank
invoice.
statement.
Sorry?
Bank statement.
Exactly. The next important set is bank statement. Okay. So second set of data is transaction recorded by the bank. So what is the proof for this? Example, you made some payment to someone. What is the proof? You will send the bank screenshot. So when we are validating the reconciliation is nothing but validation of the transaction recorded in the books of accounts versus backup reports. So here I'm telling reconciliation is a process of comparing of two set of records. That is, one set of record is the data what we recorded in the books of accounts, and the second set of data is the data which is there in the backup. That is bank statement. So another example, electricity charges charges for the month of February 25, 26, 10,000 rupees. Bill was generated by BESCOM. So what is the first entry we will record if the bill is get generated? What is the entry, guys?
Electricity bill account data to Discom account.
Electricity charges account debit 10,000 rupees to BESCOM account. Okay. So who is generated the bill? BESCOM. So this is
Discom.
the data recorded in books of accounts. This is one set of data. Okay. So one set of the data which is been recorded in the books of accounts. So what is the next set of data? What is the proof for this, guys?
Bank statement.
Bill.
Did
Bill.
we pay money?
Invoice.
No. So the second set of data is invoice copy generated by the BESCOM. Invoice copy generated by the BESCOM. Okay. So BESCOM will generate a report that generate the invoice. So that is the reason if you incurred any expenses, like if you buy anything, either stationery to the office or any office housekeeping equipments or housekeeping requirements, whatever it is, guys. So they will attach the bill. The bill will be set as a document of evidence. Okay, the bill is will be set as a document of evidence. So for each and every transaction, you can take it out any transaction which is recorded in the books of accounts, guys. So for every transaction, there should be a proof, there should be a backup, there should be a supporting document. So validation of data, what we recorded and what is there in the backup report is process is called as reconciliation. Why it is very important? So example, here in this particular transaction, while recording the transaction, I mistakenly updated as the bill is generated for 10,000 rupees, but in the BESCOM, while recording the transaction, I recorded as electricity charges debit 1 lakh rupees to BESCOM account. So here I updated as, but the bill is shown is the bill is invoice copy showing of 10,000 rupees, but I entered while recording the transaction mistakenly due to the typo error, I entered 1 lakh. So what is happening here, guys? If I record wrongly, the expenses is showing more and profit is showing less. Is it an accurate representation of the financial reports? Is it accurate representation of the financial
Yes.
reports?
No.
So to reduce this kind of errors, to reduce to make the so many people are working for the same environment in the different parts of the world, guys. Okay, so for the same process, many people are working. Many people are using the same account and doing the transactions. To identify whether the data recorded is correct or not, the companies will perform the reconciliation. Reconciliation is nothing but validation of two set of records to ensure the data is accurate. Clear, guys? Is understand?
Yes, bro.
Is understand, guys? Any doubts? So, what is the major importance of reconciliation in the books of accounts? So, one important thing is importance of reconciliation is importance of reconciliations. To check the accuracy of the financial data, the first important thing is guys, to check the accuracy of financial data of financial data. Okay, and important thing is identify any mistakes and get it corrected. Get it corrected. Identify any frauds, any frauds, to identify any financial data. So to identify any frauds in the financial data, to identify any aged open items, that is the balances which is not clear more than a longer period. So to identify those and get it corrected. Okay, to identify those and get it corrected. So and also it helps in audit compliances. So if you perform the reconciliation and everything is accurate, that means there is no any audit issues. If any issues are found while doing the reconciliation itself, we will get it corrected and we will get it implemented in the books of account so that there is no any audit escalations, guys. Okay, so it is the these are the very important parameters why the companies will perform the reconciliations. So because even a small missing of transactions leads to a lot of issues. So in order to reduce those kind of issues, the companies will perform the reconciliation to check the accuracy. And also as a human beings, when we are recording one or the other point of time, there might be some mistakes are happening. So even if it is a small mistake, it will impact a lot in the books of accounts. To reduce those kind of mistakes, the companies will perform the reconciliations and identify the frauds. Frauds can be identified, like example we discussed. So there is a bill of 10,000 rupees payment, but in the electricity charges we are shown as 1 lakh. So it's kind of 90,000 rupees overpayment is showing. Okay, so that is not a correct. So to identify such kind of irregularities and frauds, we will perform the reconciliations, and to identify any aged open items. Aged in the sense the balances which is not cleared more than a period, more than 90 days or more than 180 days. So to identify such balances, we will perform the reconciliation, guys. Okay. So it helps in audit and compliances. So this is the importance of reconciliation, guys. Okay. So these are the importance of reconciliation. Let's see what are the types of reconciliations we have. Types of reconciliations, guys. Okay, so reconciliations are divided into general ledger reconciliations and sub-ledger reconciliations. Sub-ledger reconciliations. So in general ledger, we have various reconciliations like bank record, fixed asset record, liability, that is accrued expenses account reconciliation, accrued liability, accrued revenue account reconciliation, prepaid account reconciliation, payroll account reconciliation, and intercompany account reconciliation, and loan liability account reconciliations. loan liability account reconciliations. So these are the various types of reconciliations in general ledger which has to be performed by the R2R team guys. Okay, so which has to be performed by R2R team. So yesterday we discussed if it is a fixed asset reconciliation, which team will perform in the R2R guys? There are various teams in R2R. We discussed if it is a fixed asset reconciliation, which team will perform the fixed asset reconciliation?
Asset team.
Fixed asset team. If it is a payroll reconciliation, which team will perform payroll?
Payroll team.
It is a cash and bank reconciliation. Bank reconciliation will be done by the cash and bank team. So if it is an accrued expenses, OPEX team will take care of. And accrued revenue team will take care of. Intercompany team will take care of. Like this, each and every set of reconciliation will be taken care of each team. Okay. It's clear.
Yes, bro.
Okay, so when it comes to subledger reconciliation, in subledger, it is being there with like vendor account reconciliations. That is, each vendor reconciliation will be taken care by the which team guys? It will be if it is a vendor, which team is responsible for that?
Vendor accounting.
There are subledgers like APR, P2P, O2C. If it's a vendor reconciliation, which team is responsible for that?
P2P.
P2P team will take care. Okay. So if it is customer, O2C team will take care of the reconciliations, guys. Clear? Yes, understand? So like this, the types of reconciliations are there. Now let's see. There are two types of line items. Line items. Okay. There are two types of line items. So before understanding the term line items, so before understanding the types of line items, we will understand the term called as line items. So it is very frequent vocabulary which the companies are using in the real time, guys. So what is meaning of line item? What is the meaning of line item? Okay, so line item is nothing but each transaction in the books of accounts is called as line item. Okay, so line item is nothing but the each transaction in the books of accounts. Okay, so you have been posted one transaction. So one transaction is called as line item. Line item is nothing but individual transactions, individual entries recorded in the financial records. So what is the meaning of line item, guys? Individual entries recorded in financial records. Financial records. That is either what are the individual entries we have? Journal entries, either journal entries or any invoices, that is purchase invoices, sales invoices, purchase returns, cash payments, any vendor payments, receipts, etc. So each transaction in the books of accounts is called as line item. Is clear? In the reconciliation, there are two important things. One is line item. What is the meaning of line item? Each transaction, individual transaction recorded in financial records is called as line items. So line items are two types. What are the types of line items we have? We have two types of line items, guys. We have two types of line items. One is reconcile line item, reconcile line item, reconciling line item. What is the meaning of reconcile and reconciling? Let's understand, guys. There are two types of line items in the reconciliation. In every reconciliation, you can go to vendor account, you can go to bank account, you can go to customer account, you can go to any account, guys. There are two types of line items. One is reconcile line item, reconciling line item. Reconcile is also be called as match line item, guys. What is the meaning of reconcile line item? It is also be called as match line item. It is also be called as match line. Reconcile is also be called as match line item. Okay, so reconcile line item is nothing but the transaction that is been matched. There is no any mismatches. Okay, so reconcile is also be called as match line item. Okay, it is also be called as clear line items. Okay, so these are the three different names which it will be called as. So the transaction that has been matched and verified between two records, between two records during reconciliation process. Reconciliation process. So it is called as reconcile line items. Line items where actual versus payment or actual versus supporting documents are matching. There is no differences. There is no differences. Such line items are called as reconcile line items. Reconcile. It is being reconciled. There is no mismatches. So those line items are called as reconcile line items. So example, see payment to vendor via bank 10,000 rupees. Okay, so here in the GL, what we entry we recorded vendor account debit 10,000 to bank account. So this is one set of data, and what is the proof for this? Bank statement. So bank statement is also showing. So example, 1st of February 2026. 2026 payment made to vendor. So same way, 1st of February, if extract the bank statement, payment made to vendor 10,000 is showing in bank statement. Is it matching or not? Both the details are matching or not, guys?
Yes.
So this line items is called as reconcile line items. The line items where both the details are matching, actual versus payment or actual versus supporting document are matching. There is no differences. Such line items are called as reconcile line items. And the next category is reconciling line item. Reconciling line item, or else it is also be called as open item or unclear line items. Unclear line items. So the line items where the details are not matching. So the transactions that has been unmatched, unverified between the two set of data. The transactions see transactions that has been unmatched, unverified between two records during the reconciliations. Okay, so line items where actual versus backup details are not matching, actual versus payment is not matching, and there is a unsupported documents. Unsupported documents. So those line items are called as reconciling line item. Okay, yes, in the resume we updated many places like open item management. Yes, did anyone observe in the resume? Yes, did anyone noticed in the resume we updated a point called open item management? Did you see? So
Yes, Srini.
what is the meaning of open item? Open item is nothing but uncleared balances. Let's understand what is the meaning of open item. Open item is nothing but uncleared balances. The transactions where the transaction that has been unmatched and verified between the two records during the reconciliation process. So those line items are called as reconciling, that is open items. So open items, the transactions that has been unmatched or verified between two records. Clear, guys? Yes, understand? Yes, understand, guys?
Yes, bro.
So the line items that where the actual versus backup details are not matching, actual versus payment is not matching, there is unsupported documents. Those line items are called as reconciling line items. Reconciling line item. The transaction that has been unmatched or verified between the two records during the reconciliation process. So that is called as reconciling line items, guys. So reconciling line items or open items are three categories. Open items are three categories. What are the types of category? Three categories of open items. Very important. That is LRT. It will be called as LRT. LRT. L is nothing but L is nothing but listed components, guys. Listed components. T is nothing but timing differences. R is nothing but required adjustment. How many categories we have, guys? Three categories. Listed components. Listed components. The line items. The line items where we have a differences. We have a differences and we have action plan for that. Action. Sorry, guys. Action plan for that. Those line items are called as listed components, guys. Listed components. The line items where we have action plan, where we know the reasons, So those line items are called as listed components. The line items where we have a differences and we have action plan. Those line items where we have action plan is where we know the reasons. Okay, so those line items are called as listed components. See, example. So there is a salary accrual for the month of February 25, 26 is 1 lakh. So payment made for February 26 salary is 1 lakh, 90,000. So 90,000. So the differences is how much, guys? Between accrual and payment, what is the differences? What is the differences between payment and accrual, guys?
10,000.
10,000. So we have got the information from the HR team. This differences is due to unpaid salary for one employee due to timesheet issues. Timesheet issues. It will be paid to employee in next cycle. So we know the reason here. We have action plan. When it is going to clear, this amount will be clear in which period, guys? There is a differences between actual versus payment. So both are not matching, and it is a reconciling item. We got a differences. The differences is due to why we know the reason. He has not been submitted the timesheet. So this type of line items, if we have any this type of differences, we need to categorize under which category, guys? Listed category, listed components. Guys, understand? Guys, understand, guys?
Yes, bro.
So the next category is if you have an open item, see the line items where the line items where we don't have action plan. We don't have action plan. We need to check, we need to analyze and check with the clients, check with the clients for the clearance, for the clearance. It is also called as high risk line items. High risk line items. Line items. Okay, high risk line items. See, example, there is a tax accrual for the month of February 26, 1 lakh rupees. There is an accrual and payment is not yet made. Not yet made. So do we know the reason why the tax payment is not made, guys? Yes, we have action plan for this. Do we know the reason why the payment is not being done? We are in India, they are in US. But while comparing the accrual versus payment, so payment has to match. If the payment tax payment 1 lakh rupees is made, there is no mistake. But here the payment itself it is not made. Okay. So do we know the reason why the payment is not made? No. We need to understand why it is. We need to analyze why the payment is not made, and if it did not get a clarity, we need to check with the client. So this type of line items ought to be categorized under which category? Required adjustment. Okay, clear? Or any mistakes has been happened, like the transaction itself not recorded. So there is a missing of transaction. If the missing of transaction, we need to adjust that in the next cycle. So even those to be categorized under required adjustment, guys. Clear, guys? Is clear? Is understand? So timing difference is nothing but the line items where it is posted for time being, and it will be reversed in next cycle, next month, or the line items where payment is delayed, payment is delayed due to bank holidays or bank issues. So those type of line items is called as the timing differences. Due to timing, the balance is being not clear. So example, check deposited in bank for clearance, deposited in a bank, but it was not cleared yet, not cleared yet. So these differences will be called as, so here we deposited a check, guys, in bank. So is it the same bank? It will get cleared same day. If example I say to HDFC, that it will clear same day, guys? Depends. Bro, I deposited, I got money in the same day. Might be happen if the bank will process. Some banks will take time. Okay. So to clear how many working days for the check, we will have time period in the normal scenarios. If you deposited check, within how many working days the check has to be clear, guys?
3 to 4.
Sorry. As per Indian RBI guidelines, how many working days? 7 working days. So here, example on 31st of December or 28th of February, you deposited a check. It has to credit in the same day, but it is not been credited because of bank issues. So, but we have a difference. The money is not been credited. So this kind of differences where we need to present, guys, it under a timing difference. What type of difference, guys, it is? So the balance is not been cleared. There is a differences between the accrual and payment due to timing issues. Clear, guys? So those type of differences will be called as timing difference. Please understand? Please understand, guys? It's clear.
Yes. Simba.
So this type of differences will be called as timing difference. This type of differences will be called as timing difference. Okay. So timing difference is nothing but, or else, see, we have been posted the FX revaluation. What is the purpose of FX revaluation? To revalue the FX revaluation entry. When it will get reversed, guys? When it will get reversed, guys? It will be reversed in the next cycle. So this type of differences will be called as timing differences. Clear, guys? Yes, understand?
Yes, good.
Guys, what are the three types of categories we have in open items? So we have three kind of categories: listed components, timing differences, and required adjustment. So required adjustment is also be called as the line items where we don't have action plan, we need to analyze and we need to clear. Okay, so those are called as, and in another way, the line items where the line items where rectification entries are required to pass or required to pass to clear, are required to post to clear the balances, to clear the balance. So such examples, such entries are called as such differences are called as required adjustment. See, and one more example. Salary payment to employees wrongly credited to employee tax account, 1 lakh rupees. So here, do we need to adjust anything, guys? Is it required to adjust? Is it required to adjust here? So the payment of salary, it has been posted to employee, but it is wrongly debited to employee tax account. It is wrongly debited to employee tax account. Okay. So is it, if instead of debiting salary account, they debited employee tax account? Okay. Is it correct, guys? See,
No.
posting this, they have been posted employee tax account debit 1 lakh rupees to bank account. So what is the payment we made? Is it tax or employee salary? Is it
Salary.
tax? What is the rectification entry we need to post? So this type of differences need to be can. Is it both the details are matching? No. So that's the reason it will be called as required as reconciling item. In the reconciling item, what is the category we need to categorize this? Required adjustment. Okay. So what is the rectification entry we need to post here?
Salary account debtors to bank.
Salary account debit to employee tax account. Okay. Reclassification, we will do this. Is clear? Is understand?
Yes, bro.
So this kind of difference is also be called as required adjustment, guys. There are three categories: listed components, timing difference, required adjustment. So if you know the reason, those are called as listed components. If you don't know the reason, we need to check. Those are called as required adjustment. The line items where it is being not clear due to timing issues, those are called as timing differences. Clear, guys? Clear?
Yes, bro.
And we have three different applications, guys. So how are you performing the reconciliation in the previous organization? So applications used for reconciliation. So if you tell Excel, so some companies still, many companies are using still Excel to do the reconciliation, guys. And few companies now, the companies which have very good money and they worth to buy the licenses, they're using Blackline, Trintech, Trintech, Reconaut, SAP, S4HANA. So these are the various softwares which will support for reconciliation automatically. No need of doing no need of updating data manually. Automatically, if a company purchases these applications, the data will be synchronized from the ERP applications like SAP to Blackline, SAP to Reconaut, SAP to other applications. That synchronization of data will happen. So the data will be auto-populated into the system. Just we need to validate if the details are matching, we need to match. So, but still companies are using Excel to do the manual purpose. So because manual checking is very important in this particular process. So many companies, even they're using the software of the Blackline or any other applications, they're using Excel to validate the details, guys. Clear? Is clear?
Yes, bro.
Any doubts? Is any doubts, guys? Okay, guys. So we will wind up now and we'll meet on tomorrow for the next session, guys. Okay. Thank you.
Okay.
Thank you.
So, please.
Thank you, sir.